And we're very pleased to have with us today as our guest at the noon briefing, Axel van Trotsenburg, the Senior Managing Director for Partnerships and Development Policy for the World Bank Group. And he's here to talk to us about the IDA 21 replenishment. Mr. Trotsenburg, the floor is yours.
Thank you very much, and good afternoon, everybody. I wanted to touch on actually why I'm here. That is basic on the briefing on the IDA 21, but also would like to take the opportunity to mention that the World Bank, of course, issues a lot of reports, but this is an important report that we regularly issue, and that is embargoed till 1 o'clock, but it's called the Global Economic Prospect. It provides you with an update on the world economy. And I just thought, before I get into the IDA 1 briefing, what are the headline numbers? And it is interesting, there is another interesting chapter looking at low-income countries over the last quarter of a century, and particularly as we go to the finance for development, this may actually be important. First, on the headline number, that we expect that the global economy will expand in this year as well as in 2026 by 2.7%. That is about the same pace as 2024. We will also expect that inflation and interest will decline gradually. But we need to keep in mind that this growth rate remains below the prevailed one in the decade before COVID. Namely, at that stage, the world economy was growing 3.1%, so it's below that. For developing countries, we expect that they hold steady at around 4% during this period, 25-26. And in the case of advanced countries, growth remain in the order of 1.7% for 2025 and 26. Again, unchanged from 2024. And global inflation, we expect to decline to also around 2.7% in these 2 years. Now, usually in these reports, we also take an opportunity to analyze a specific issue. Always, this time, we wanted to look at the first quarter of the 21st century for developing countries. And there are interesting takes, but also they are important when the discussions take place for the finance and development towards the middle of this year. Namely, developing countries, one message has started out strongly to close the income gap with the wealthiest economies. And that was in the very beginning of the century. And since the global financial crisis, this has ebbed, and now they're falling further behind. Also, important also again when we discuss financing for development, as a share of GDP, foreign direct investment flows into developing economies are now at about half the levels of the early 2000s. Also, the per capita growth rates of income in developing countries is currently 0.5 percentage lower than in the wealthy economies. This excludes India and China from this, but this is since 2014. So this means that developing countries, except India and China, are falling further behind. Also, in terms of trade, the new global trade restrictions in 2024 were about 5 times the 2010-2019 average, dragging down overall economic growth. And keep that in mind, where economic growth ultimately is. In the early 2000s, global economy was in the order of 5.9. In the 2010s, 5.1. And in the very early 2020s, 3.5. And I just mentioned for 25, 26, 2.7%. Also, what is important is that there are changes in the world economy. Developing countries account today for about 45% of global economic GDP, and that's up from 2000 when it was 25%, and it fuels currently 60% of global growth. And more than 40% of goods of export from developing countries go to other developing economies. That's double the share in 2000, important for economic development. And between 2019 and 2023, developing economies accounted for 40% of global remittances. And so this is quite important. Now, what is clear when we look ahead, we see clear challenges, particularly for many low-income countries, is the high debt burden, the weak investment climate, and productivity growth challenges, as well as the trade links. And I mentioned already the non-tariff barriers. So this report will be released. There is a whole, there are more data, but I just wanted to mention some of the headline data that may be of interest for yourself. Now, I took the opportunity to come early in the year to report a little bit back on the IDA negotiations. They are taking place every 3 years. This is the fund for the poorest countries, and these are global negotiations, and they were concluded in Korea in early December, and where we mobilized $100 billion, of which about donors are contributing in the order of $23.7 billion. And I wanted to report on that also because we have been over the different cycles working closer and closer also with the UN system. The Secretary General has been extremely generous in his support during our negotiations. He sent important messages to the negotiators, most notably when we were in Nepal in the middle of last year, as well as other heads of agencies have been very supportive because we have a close working relationship with it. Even operationally, just to let you know, over the last 8-9 years, our financial support to UN agencies so that we coordinate that is about $11 billion. So that's about, on average, I would say $1.2 billion per year. Agencies like UNICEF, World Food Program, tend to get a lot of also money. How we then implement that together. And that has been actually a very important relationship, but also with UNHCR, WHO, WTO, all these agencies, we are in not only close contact, but also in coordinated work together. So we were very grateful for that support, but also thought that it would be a good opportunity to address here also the General Assembly of what we have been doing together. Just to go back to IDA 21 is the 23.7. We were hit very much by the exchange rate because many countries their currencies had devaluated vis-a-vis the US dollar. So just to give you a sense, despite the fact that in local currency, the contributions actually increased by 13%, the ultimate contribution in dollars was about stable. And that was purely because of exchange rate effects. If they hadn't persisted and had been the same as in IDA 20, we would have had a replenishment of 5 billion higher. Who are the largest donors? And in the donor group is the G7 accounts for 60%, the EU about 31%. So this provides you a bit of a sense of where we are. Now, in terms of amounts, the IDA 17 was about 52 billion, today 100. So basically, in a fairly short period of time over the last 10, 12 years, basically it doubled. So that has been also good. Where is the money going to go? Is about 70% will go to Africa. Africa has become increasingly central for our operations, particularly IDA. where for what purposes we are providing a lot of support to fragile states. Here again, the cooperation and coordination with the UN system has been excellent and important. We are allocated about 40% of that to fragile and conflict-affected states on this. Also, climate change is absolutely key, and in climate, about 45% of the resources are going to climate, of which about half is going to mitigation, half is going to adaptation measures. Also, in this whole area, what you are seeing is that we all continue to have strong support for gender, infrastructure, energy access. Here, for example, we're working with the African Development Bank on the so-called M300. That is a huge Africa-wide program that is seeking to provide access to 300 million Africans by 2030 to electricity. That is the most ambitious effort ever, certainly, of the international community. And this will require billions of investment, and the bank is prepared to put here a lot of resources on this, because it will be key for economic development, private sector development. This is going to be. Why are we also putting further emphasis on this is that we are seeing in Africa the demographic trends are such that in the next 10 years, about 1.2 billion people are coming into the labor market. Actually, right now, only 400 million have a good chance to have a job in the official and even semi-official sector. So therefore, what we need to see is how can we actually mobilize the job agenda, the private sector involvement, and that requires also basic infrastructure. Electricity is one of them. So we are actually quite pleased with the result, because it is not easy in fiscally challenging time to ensure that we have a critical mass of working capital for the poorest countries. What we have to ensure is the best possible partnerships. The UN is a key partner on this to actually not only keep the agenda on development not only alive but active in its implementation. You saw with the Pact for the Future, but also the midterm review SDGs, there's a lot of work to be done, and we need to see how we jointly can make further progress on this. This is clearly also, and there is an effort of the World Bank to really scale up further. So this is for the low-income countries, but also for the middle-income countries. We have been taking measures, sweating the balance sheet to see how we can actually increase our lending program. We have undertaken some key measures, from lowering the equity loan ratio that will release about 75 billion of lending capacity over 10 years, to hybrid capital, to guarantees, and it's all meant to actually really stretch our abilities to support, and in parallel have private sector activities. And our private sector arms have been doubling their commitments, and that is also joined by increased mobilization with other partners. So it is really also, again, looking at when we are looking at the finance for development later on this year, it is the task. The homework starts at home, and that was what we had. So you need to see what can you do, but it is also then the joint effort to really see how we can actually provide a delta that actually gives a much better fighting chance to also make further program of the SDGs. Let me stop here.
Thank you very much. I'll now turn over to the correspondents for their questions. Yes, Gabriel and then Maggie.
Thank you, Mr. van Trotsenburg, for the briefing. My name is Gabriel Elizondo. I'm a correspondent for Al Jazeera English News Channel. I have two questions. One is about the UN and the World Bank. The second one is country-specific about China. The first one is, you said in the last 8 or 9 years, the World Bank has provided a financial support to the UN agent, some UN agencies to the tune of about $11 billion. Can you just explain how the World Bank decides how much money they support UN agencies with each year, a little bit more background on that, and which agencies specifically? And then the second question is, as you know, China recently announced that their trade surplus last year was $1 trillion, a record. My question is, clearly China exports are swamping the overall world trade situation. Is this sustainable? How does it affect the world economy? Thank you.
So on the UN, this is not that we predetermine how much it is really country specific and need specific. So in some countries where we have been challenging, for example, in fragile states where we may not be able to operate fully, but UN agencies are there, is actually a wonderful complement that UN agencies are on the ground, but may not have all the capital what they need to actually implement education program, health program, etc. And so then we do support it. This is something that we have developed more and more over the last 10 years, and I think that has been extremely helpful, particularly in the fragile states, that we were able to work in areas where we would be challenged, that we can do that. And then it depends largely what is available in terms of what kind of needs from programs is it, and can we actually respond on that. So it has to be demand-driven, country-specific. It is not that we a priori say, look, regardless what is ever, we'll allocate that. That doesn't happen. But I think that is a country X and you have a specific need, and we have also our limits that we cannot actually execute it, then actually that complementarity. I think it's a very important point is when we are looking at the multilateral system, there has been increasing calls by the international community how actually the sum of its parts is greater than these parts. And that is how can you exploit the comparative advantage of UN agencies in such a way that we can then complement that. And I think that has been actually a good experience. And I think also an important experience that maybe in the past we should have done that better. But I think we are, on good track. On China, on trade surpluses, clearly surpluses are also in other countries. There is. I think it is a discussion ultimately in the trade area. Are there imbalances and what are the reasons behind this? Sometimes there are trade incentives, there are sometimes exchange rate policies, there are sometimes trade policies that are producing these results. There may be also on the receiving side that there is more demand than there is supply. So I think it is important to really look at this and what ultimately the implications are for individual countries. And I'm sure that if you are looking at trade surpluses, you will see in some countries there is a regional analysis. Some countries there is a deficit, also there are surplus and an increasing surplus. So you have not only to look at the absolute thing, you need to look at the trend and then look what the policy implications are.
Thank you. A question from Margaret Bashir.
Thank you. I'm Margaret Bashir with Voice of America. I have two quick ones, actually. One on inflation. You're saying the report expects it to decline to 2.7% in the next 2 years. As a consumer, we rarely ever see prices go down, even when inflation reports are positive. So do you expect consumers around the world to actually have more money in their pocket if inflation declines, or for their savings to increase? And my other question is on tariffs. The incoming U.S. administration is saying that there's going to be a lot of tariffs put on a lot of different countries. How do you expect that to impact the global economic prospects over the next 2 years if those do happen, which it sounds like they probably will?
Well, on the second question, it is never good, certainly of an international institution, to speculate what somebody is going to take, because basically you hear things. At the end of the day, you will need to be fact-based analysis. So I would not be feeling easy to speculate, or if somebody is passing this. We are clearly, as I mentioned, we are monitoring all economic trends, including trade trends, including tariff bears, non-tariff bears. We did that during COVID, and we actually report the facts, not the announcements or speculating on possible announcements. I think that it has been our tradition.
Well, could I interrupt you 1 second?
Yeah.
So could I ask it a different way then? As a non-economist and a layperson, when tariffs are in place, how does that impact economic prospects? How does it trickle down across, and not just between the two countries that have them on each other or one on the other, but does it have a wider global implication?
Well, I think what you always say, it becomes increasingly difficult, because basically you see tariffs in certain categories that are high, others are low. And I think you need to see what is in the agriculture area. You know that I think also the UN, also the World Bank, we have been working a lot on, for example, on agriculture for the low-income countries, how you can actually facilitate access. For example, in Africa, when we're looking at the whole challenge of food security, are trade policies in OECD countries harmful to agriculture in Africa? And I think we have been there, and also agencies as well have pointed out that, for example, agricultural subsidies in OECD countries they have not always been very beneficial to the low-income countries. So we look at those things. To make sweeping statements on all the categories is not right, because you are missing different points. So we need to actually be very, very careful about it. And then let me just add, because I mentioned that, it is very often not only tariffs, it is also non-tariff barriers. And then you have to look how impactful non-tariff barriers could be. So I think those kind of things will need to be analyzed. You will also see regional blocks in which basically within the region, take the European Union, there is of course free trade within the European Union, but outside of the European Union there are different things. So I think we need to have a much more differentiated dialogue than sweeping statements on one, because I think that will not help, I think. On the inflation, when you say money in the pockets, there is always in the world some inflation, even with 1%, but that didn't mean that people have more money in their pockets. What's important is, are people have, in real terms, more? Secondly, and that is important for particularly developing countries, is that when you are poorer, the share of your income allocated to food is much higher. And therefore, when you have higher food prices, that is something that hits poorer people, poorer sections, disproportionately than if you are in the more upper echelon in income. So we need to see that is where people, particularly lower income, with lower incomes, people have been concerned, because that directly affects what is left in your pocket. So that is one of the areas where you have to look. Clearly, it's inflation, but for example, if you are also look in some of the European Union countries, is they have been in some of the major income economies have been in recession. That affects the welfare of people, and so those things need to be evaluated. Our suggestion is usually that when we are looking at the overall economy, you need also to look, is this also affecting different sections in the population, and particularly the poorer sections could be disproportionately affected.
I believe we have a question online from Iftikhar Ali. Iftikhar?
Thank you. Sir, in your opening remarks, you mentioned a debt burden or debt crisis of the developing countries. Do you are you also making some recommendations in this situation?
So I've worked a lot on the debt issue. We have been, for a sustained period of time, have expressed concern about the debt situation, particularly of low-income countries. And in the case of the low-income countries, the majority are facing debt situations that are characterized either being in distress or at risk to fall in debt distress. And that has been a concern for us. We have, within the G20, there has been what they call a common framework arrangement in which debt is being dealt with. Take the example of Zambia or Ghana that have been dealt, that requires international cooperation on this. And then you need to look also on not only to deal with specific debt situation, when there is debt sustainability, it will need to be treated very often, then also with regard not only reprofiling, but it may also require a haircut. There is also another situation is that there are liquidity challenges, so that a country doesn't immediately face a debt problem, but they need liquidity. And that is a call for the international community to ensure that there are positive net flows. What do I mean with positive net flows? That the disbursement exceed amortization and interest payment by the country. For the World Bank, this is quite important, and for the low-income countries, that we have a sharp focus on the net transfers, and particularly in the low-income countries, when I talk about IDA, we're trying to ensure that these net transfers are in excess in the aggregate of $15 billion, so that countries can assure that they have the flows. We would like that other creditors try the same, because this in challenging times, countries will need also that type of liquidity support. That doesn't mean that countries can also do more also on domestic resource mobilization, etc. But I think from an international point of view, we can actually do something more. These are measures that we have been championed for quite some time, and I was involved in the HIPIC debt initiative that was in the 90s and early 2000, is that we need better debt management systems and more transparency. We are a big a promoter of transparency, because the populations of developing countries should know what kind of debt is being contracted, and particularly what conditions. In the case of the World Bank, since a long time, we do that when we provide financing, we provide all the conditions that are attached to it, not only the program, but also what are the financial conditions, how much is being granted, what is the maturity, what is the grace period, what's the interest. And we think this is a good practice, and we would love to see that more creditors embrace that same approach.
Thank you, sir.
I see no further hands up. So with that, I would like once more to thank our guest, Axel van Trotsenburg, the Senior Managing Director for Partnerships and Development Policy for the World Bank Group. Thank you very much for your briefing.
Thank you very much.
Have a great day. Have a good afternoon, everyone. And tomorrow we'll have as our guest Philippe Lazzarini of UNRWA.
Have a great.
The report, by the way, have they emailed it out to us?
We have also a press release with the reference to it. My colleague has the press release with the relevant data, as well as on the second page is the reference to the website, be it the general report, but also the regional chapter. So I hope that will help you. Thank you.